We've got a guest right now who's got some concern about what might happen this month, though. After a bumpy few months for the markets, thanks to uncertainty around virus fears and stimulus, as Joe mentioned, the Dow now positive for the year for the first time since September 2nd. Joining us right now to talk more about it is Mark Grant. He is Chief Global Market Strategist at B. Riley. And Mark, you're a little worried about what may happen as we get closer to the election. There could be a number of twists and turns that you think could really add a lot of volatility.
Yeah, and you can tell Joe I have my glasses on. So
well, you see them, Elton.
They're not rose-colored today.
I am somewhat concerned. I think the closer we get to the election, the more the focus is going to be on the election. And I think there could be surprises between here and there. I don't trust the polls. It just is a very uncertain time for the next few weeks. And I think people should look both at their bond portfolios, if they have nice profits, remembering that most bonds mature at par. And in equities, I'd be taking some profits, taking some money off the table, and just protecting yourself. I've been around a very long time, and I'm just cautious at this point in time. I've never seen an election like this in my lifetime, and I think people have to, be ready to deal with whatever's going to come.
You've never seen an election like this in your lifetime because you think this one is a more stark comparison between the two? Exactly
right. Generally, it's been one side's a little left, one side's a little right, but now stark is probably an understatement. There's just a tremendous division between what the two parties represent and the future of the country, depending upon who's elected. So I think in those circumstances, it's good to be cautious.
What happens if there's actually this move, like you say, where pensioners and some of the big bond players, pension funds, who have put money into the equity markets, what happens if there's added volatility and equities come down pretty sharply? How do you think that would actually add to the chaos?
It's going to hurt any kind of pension bond, municipal bond, pension bonds, corporate pension bonds. I've been saying to my institutional clients, which are what I do basically, to protect themselves, and if they have a profit in some of those bonds, to take it now. And I think if we do have a downturn in the equity market, it's going to cause a lot of difficulties for a lot of retirees and a lot of pension funds and university endowments, which leads me to this cautious approach, at least until the election is over.
So take money off the table. If you've got winners, maybe pull in your horns a little bit, wait and see what happens with the election, and then you'll reassess?
Yes, exactly right. This is caution. It's not saying get out of everything. It's not some big major, play to do. It's just you have to be careful in here so you don't get whacked by whatever the election results are going to be.
Shepard Smith here. Thanks for watching CNBC on YouTube.